As we go live, Rezolve AI PLC, trading on the NASDAQ under ticker RZLV, is at $3.02 per share. That's a gain of about 1.85% on the session, putting it up about 5.5 cents. Now, this comes after a brutal day yesterday where the stock shed over 8%. And if you look at the chart, it has been a painful slide from over $8 a share just a couple of months ago. The expectation from the outside, looking at this modest green day, is that this is just a beaten-down, high-growth tech stock finally finding some temporary footing. The reality, however, when you look at the trading data, the settlement data, and the short-selling metrics over the last 60 days, is that this stock has been an absolute war zone. Today's stability isn't just a random bounce. It's the sound of a ceasefire after a technical and narrative battle that has shaken out thousands of retail investors. The stock actually opened down at $2.71, and this climb to $3.02 on more than 7 million shares of volume suggests a fight to reclaim a new level of support. The common belief, especially if you spend any time on investor forums or social media, is one of total despair. We see the discussions on Moomoo and Reddit, and the sentiment is bleak. You see comments like, "What a disaster this stock has been. You win shorts, hope you're happy," and many investors debating whether to sell for a huge loss. This panic is fueled by a very specific narrative being pushed hard, one that points to serious lawsuits against the company, specifically mentioning cases with Yorkville and JBAM, and spreading concerns about huge liquidity problems and even fraud. This is the story that many traders are using to justify the stock's collapse, and it has been incredibly effective at creating fear. When you see a stock in free fall and you read about lawsuits and liquidity crises, the expectation is that the company is heading for zero. But this is where we have to separate the narrative from the numbers, because the panic selling is missing the most critical piece of the puzzle. The story of RZLV's collapse isn't just about a short thesis, it's about a period of extraordinary and visible stress in the stock's settlement system. Let's look at the failed-to-deliver data, or FTDs, from the SEC. For most of its life, RZLV had negligible FTDs. Then, in late September, the numbers exploded. On September 22nd, there were 7.9 million shares that failed to be delivered. On September 23rd, 7.8 million. On September 24th, 7.7 million. This continued for over a week, with FTDs valued at over $55 million on a single day. This is not normal market activity. This is a 5-alarm fire in the stock's plumbing. It signals that parties were selling shares they could not locate, creating immense artificial downward pressure. This is the data that validates the feeling of manipulation that so many retail investors have been complaining about. This brings us to the short-selling mechanics. During that same period of high FTDs, the cost to borrow RZLV shares was astronomical. We saw reports of the borrow fee rate spiking into the triple digits, at one point exceeding 180%. When it costs that much to short a stock, it means the demand to bet against it is extreme, and the supply of lendable shares has vanished, partly because of the FTDs. Now, what's the short thesis they were operating on? It's those lawsuits. The argument is that these legal battles pose an existential threat to the company's financials. We see posts on Reddit claiming that the company's entire subreddit is compromised, banning users who try to point out these legal risks. That's the story. This is a key debate, and I want to know your take. What's your view on those lawsuits mentioned on the forums? Are they a legitimate company-ending short thesis, or were they just convenient noise used to justify the high FTD short position? Let me know in the comments. Here is the actionable insight, and it's the most important part of this entire analysis. That acute pressure appears to be over. As of the most recent data, those massive fails to deliver in the millions have completely vanished, dropping back to negligible levels by mid-October. Even more telling, the cost to borrow RZLV stock is no longer in the triple digits. As of today, the borrow fee rate is a standard 8.59%. The short interest is still elevated at around 8.16% of the float, but the days to cover ratio is low, around 1.2. This means the squeeze fueling crisis-level pressure is gone. The war has cooled, the FTDs have been settled, and the borrow rates have normalized. If you are an investor trying to navigate this, this is how you track it. You can't just read the social media sentiment. You must look at the data. You can go to sites like Fintel and look up RZLV. You're looking for three things. First, the short interest percent of the float, which is 8.16%, high but not critical. Second, the short borrow fee rate, which is 8.59%, again, elevated but not critical. And third, and most important in this case, is the fails to deliver data, which is public from the SEC. When you see a spike like the one RZLV had in September, you know you are not in a normal trading environment. It's a sign of a structural breakdown, and it often precedes high volatility. Now that those signals have returned to normal, the stock is no longer trading on that technical pressure. It's now free to trade on its actual fundamentals. So with that technical overhang removed, what is the company left with? This is where the expectation versus reality gap becomes the size of a canyon. The reality of the share price is $3.02. The expectation from the company is wildly different. Rezolve AI recently issued guidance that it expects to exit 2025 with an annual recurring revenue, or ARR, rate of $150 million. They also initiated 2026 guidance for a $500 million ARR exit rate. These are not small numbers. To support this, the company has been on a hiring spree, pulling in senior executives from Apple, Google, Microsoft, and SAP to lead its global expansion. The company's entire business model is based on its Brain Suite, an AI-powered platform for mobile commerce that includes Brain Commerce and Brain Checkout, tools it sells to major retailers. This bullish story is precisely what makes the stock so divisive. On one hand, you have the Reddit narrative of lawsuits and failure. On the other, you have the official company narrative of hypergrowth. Who is right? Well, let's look at who was buying during the September FTD crisis. While retail was panic selling, institutional filings show that major players were initiating positions. We're talking about firms like BlackRock, Vanguard, and Citadel. These massive institutions weren't scared off by the lawsuits. It seems they used the short-induced panic and the resulting share price collapse as their entry point. This is a classic example of sophisticated operators buying into manufactured fear. Furthermore, Wall Street analysts seem to be completely ignoring the retail panic. There are 8 analysts covering RZLV, and the consensus rating is a strong buy. The average price target is around $9 to $10 a share. This implies that the professionals who model this company's financials believe the stock has a potential 200% upside from here. They are siding with the company's $150 million ARR guidance and dismissing the lawsuit narrative as background noise. This is the disconnect. Retail sees disaster, but the company, the institutions, and the analysts see a massive opportunity. Looking forward, the path for Rezolve AI is now entirely about execution. The shorts have fired their bullets, the FTDs are cleared, and the stock has stabilized. The new technical support level is being built right now, today, as it fights its way back above that $3 mark. The next major catalyst will be the company's fourth quarter and full year 2025 earnings. This will be the ultimate prove-it moment. The company must show that its $150 million ARR guidance is not just a projection, but is translating into actual recognized revenue. If they report a strong quarter and reaffirm their 2026 outlook, the remaining short thesis based on liquidity problems will be completely invalidated. The risk, of course, is that they miss. If they fail to show that revenue is materializing from their big partnerships, the bear case will regain credibility, and this $3 level will not hold. Before we wrap this up, I need to hear from those of you who have been in this name. Comment below how many shares of RZLV you're holding and tell me if you sold during the September panic or if you are holding for that $9 analyst target. So to summarize today's action, the $3.02 price on RZLV isn't just a random number. It's the floor being built after a storm. The expectation for this company, based on its official guidance and analyst ratings,